I think the market is going to pay more attention to the economic reports right now, right on the ground outside their windshield, than it is through the rearview mirror at an earnings season that everyone knows was highly distorted by weather. And so far, they're coming in, I think about 70% have been beating the much lowered estimates that we have. And I think that's probably what they're going to continue to be. If you look aggregately at the economy, it's been awful good. We got claim numbers that have been real good. Retail sales numbers better than expected. Industrial production numbers better than expected. Confidence moved to the highest level of the cycle. I really think the economy might be growing close to 4% here in the second quarter. And if it is anywhere as close to that, Sarah, that is what ultimately is going to bring a bid back to Wall Street, I think, and push it above 1900 towards 2000.
We've had this kind of stealth bull market in energy land. It's, look, everyone's talking about the great earnings handoff that's required this year from a macro standpoint, and that's going to demand basically cyclicality in your portfolio. And I think that the least discounted, the most overlooked part of the cyclical economy is energy. I think, as a percent of the S&P, it's 10%. I think you can easily be overweight energy and at this level of weighting and do just fine. I mean,
you have to be a little bit more defensive. Mm-hmm. The plays that you need to make right now need to be a little bit better thought out, a little bit more technically researched. And that is areas that deal with the liquefaction of natural gas. So her natural gas plays and getting into oil, we think that those are very positive trends. And it focuses back on USA. We are now refocused on energy independence. And that is going to become stronger and stronger. And I think that play is going to last for at least the next 2 to 3 years. And it's going to be a very investable trend for investors.
Abigail.
Yeah, in some ways it's more of the same. I mean, the export bounce over the past year has been really very disappointing when you look at how much the currency's moved. So the companies, I think, essentially have not changed overseas prices. They've not tried to get market share. They've just taken a big increase in profit margins. And that's what you've seen in terms of the profit numbers coming through. I think there may be some specifics in March, obviously ahead of the sales tax increase we've been talking about. Maybe some companies diverting production to meet that surge in domestic demand we've seen in recent months. And again, pulling in imports to meet the surge in domestic demand as well. So I don't think this is necessarily the beginning of a new trend. I think it's maybe a little bit of a one-off related to the sales tax, emphasizing these numbers as well. I think this is probably just part of the same trend. And I think it does lead to the question of what else do they need to do in a policy sense to try to boost the economy. And it seems to me that if the yen at just past 100 isn't enough to drive an export positive contribution from net exports, then you probably need the yen to be weaker.